With you lately, and I think the last time you were on, you talked about how you think we're in worse shape potentially than we were in 2008. My guess is you haven't gotten any more positive on the market since that time, correct?
Well, actually, I've been quite positive for equities after 2009 when they became very cheap. But recently, I have to say that we are again in a massive financial bubble. In bonds, in equities, we are in a bubble in asset prices that have gone up dramatically. Farmland is up 10 times over the last 10 years. And bitcoins are up now, and who knows what next will go up. But we are in a gigantic speculative bubble. And as I said, I haven't shorted any stocks yet because they may still move up. But I don't see any value in stocks any longer, except very few sectors.
What really started the concern? Was it just a valuation call? And what was the point where you said, hold on a minute, this no longer makes any sense?
Well, basically, the market went up from 666 on the S&P in March 2009. We're now at over 1,700. I felt the correction was overdue when the market was around 1,600. It hasn't happened, but it doesn't make stocks good value because of that. It's like in Asia, some markets kept on rising at the beginning of this year, and then within 3 months, from May of this year to now, they dropped 30% currency adjusted. So we have to be careful in this kind of exponentially rising markets.
Mark, a bubble is different from overvalued. Is this just an overvalued market, or is this a bubble market? And what are the metrics in your mind to distinguish between the two?
Well, the Schiller PE ratio at the present time is something like 24 times earnings. So it's at the high level that would suggest relative low returns going forward. Interest rates on the short end are at essentially 0%, so they can't go much lower. And bond yields are relatively low, even though the 10 years has risen from 1.43% to 2.75%. We're still at a very low level. So I think that financial assets, if you look at the next 5 to 10 years expected returns, that these returns will be very low. Now, can the market go up another 20% before it tumbles? Yeah, it can.